Japan just surprised the market announcing they're starting to sell stocks. But what does that mean? So let's dive right in. Uh, the BOJ, the Bank of Japan, has been already on a normalization narrative. So the idea is that after decades of deflation, now we're coming back to normal. We expect the prices to go up because wages are going up. The whole world is actually getting back to normal. So activity should resume and the BOJ should not intervene anymore. So they're trying to get this sense that they want to hike rates. They are becoming more hawkish, but despite of all of that narrative, we don't see any changes on interest rates. So they kept it unchanged, even though there were two members of the committee uh, of the BOJ that actually wanted to hike yet another 25 basis points to 0.75, but it didn't go through. So they kept it unchanged. However, they just announced it in a way to create some hawkishness of something that is not really true, since everybody else, all other central banks, including the Fed, is now on a cutting spree because we see problems with the labor markets. We see a global economy that is going down. We see also oil prices coming down as well. So more of a recessive force, macroeconomically speaking. However, narratives are something completely different, and this will create effects in the market. However, basically the BOJ has just announced that they're going to be selling $2 billion per year on ETFs that they currently hold on their balance sheet. But if you take that into consideration, it makes absolutely no sense. If you understand monetary mechanics, it should not really create any kind of noticeable effects, since when our children, great children, or even grandchildren or great grandchildren are going to be alive, we're probably not going to see any kind of effect until they unwind all of the ETF holdings. So they did not hold specific stocks per se. They do not pick and choose the winners and losers, but just by buying an ETF, so an indexed ETF that they actually started issuing 15 years ago. Now we see that unwind coming up. So the idea is to create some sort of maybe a wealth effect, and give the impression to the population that they're doing something about it. So that's just part of the tools, the toolkit of illusions to try to convince the population, hey, we are actually doing something. And we discuss a lot about that in our Bitcoin intelligence report. And I would like to announce here for the first time on our channel that we did just launch our first Substack account. So here on Substack, you're going to be able to see all of our Bitcoin intelligence reports. So we just had the brand new report that we released here, the post rate cut uncertainty. So lots of stuff to unpack here with all of the charts that we use. So everything is going to be accessible for members. So you can see here on the link on the description below, so you can have access to our charts, to our intelligence, and all of our analysis, so you can actually know what to do with that information. And for sure, we talk a lot about Bitcoin and how that impacts global liquidity. So Japan is pretty important for that liquidity, since the yen is one of the most important currencies out there, and part of the DXY. So the dollar index has as the second biggest one the yen, and we see here how it has been benefited from a weak dollar. So it's kind of a comfort pocket, so to speak, that has been generated by the weak dollar to kind of stabilize the JPY, the Japanese yen, as you can see here on this channel trend here. So this creates some welcome relief since basically July, August, so a couple of months already, where it has been stabilized at 147, so below 150, which is pretty welcome inflation expectations in Japan. However, depending on what happens to the dollar, it might change things a little bit, because there's a whole scare about the 30-year yield in Japan and all that. We had discussed that in previous videos as well. But we do see that narrative is one thing, but the reality of monetary mechanics is a whole different animal, since yields are coming down worldwide. And this is not great news. This is not something that creates stimulus in any economy. And we also discuss how the rate cuts at the Fed funds rate in the United States, also do not create any kind of relief, but they are an anticipation. They are actually it's a lagging indicator, so to speak. So they react to what the yield curve already does. So it's not and not the opposite that everybody expects. So they do not lead; they always follow. So it's going to be interesting to see if Japan, even though they didn't hike rates, they chose to go this route to maybe not break the market too much, and but still create the expectation, to create a hawkish signal that they are actually doing something. So that illusion helps them with the help of the media to show that Japan is in the vanguard of things. They're trying to their best to make the economy come back to normal and not interfere. However, based on how Japan is actually set up in the euro dollar system as a global dollar distributor and owner, and the biggest holder of US bonds, which are the banking system's collateral to generate that liquidity. So it's going to be interesting to see if reality is just going to hit them in the face, so to speak. So this is going to be, let's see what the next steps are going to be, if they are stopping that hawkishness on the rate hikes and try to maybe replace with other tools when this one wears off. But very interesting choice of tools, and central banks never cease to amaze us in how they get creative, and Japan is definitely one of them. So hope it was helpful, and see you on the next video.